signing in.
Okay, so that's basically the lineup packed over the next 60 minutes or so. But we have a very special guest now joining us, as promised. Poonawalla Finance has inked a pact to sell its housing finance subsidiary, Poonawalla Housing Finance, to TPG for 3,900 crore rupees. Adar Poonawalla is chairman of Poonawalla Fincorp, and he's joining us right now to take some questions. Adar, great to have you with us here. Good afternoon, Prashant this side. Just first question on the rationale behind the sale. What's been stated is that this is in line with the Vision 2025. That's absolutely correct. So I just want to ask you, housing finance is a pretty steady business, right? 20-year mortgages usually get paid back in under 10 years. Delinquencies are very low. What really prompted you to sort of sell this?
Yes, thank you. Great to be here with you to discuss Fincorp and its future strategies. You know, ever since we took over the Magma Group around 2 years ago, I've been focusing on growing the business and digitizing, the lending, the way in which we've been lending and collecting. Now, we took a strategic call, a while back to initially raise capital, if you remember, in Poonawalla Housing around 15 to 20%, just for the natural growth of that company. When we later on received offers, from various parties, we called for a board meeting, to discuss recently, and then decided that when we received an offer for the whole business, that the valuation was a fair valuation that we were getting. It has grown substantially over the last 2 years. And, these are two different independent businesses which need a lot of capital separately. So we said, let's focus our energy on the NBFC and find a great partner like TPG, someone with a vision to grow the housing finance company separately. And, that was the basis of the decision. And as a result, Poonawalla Fincorp now will receive, subject to regulatory clearances in the next few months, for the deal to go ahead. We've signed a binding document. We'll receive 3,900 crores, in Poonawalla Fincorp, which is great for all the shareholders.
Right, Adar, good afternoon. The street believes that the remaining part of the business is unsecured loans, pre-owned car loans and LAP. That could be vulnerable to a higher degree of churn given its relatively lower duration in comparison to home loans. How do you justify that?
Yeah, but I'll tell you, the way I look at it is that there's different risk profiles. For a housing business, you need to borrow for the long term because you're lending for the long term. In the NBFC and Fincorp, we've got loans which, go out for a few months. We've got up to 2 years, 3 years at the most. Now, I feel a lot more comfortable, given the scenario right now, in terms of risk management and asset liability mismatches, which other NBFCs have suffered, borrowing in the short term and lending in the short term as well. And don't forget our IRRs, our ROAs, ROEs, everything is so much better and easier to achieve in that kind of business. And that's why we thought we would focus on that and leave the housing business to someone else to get into. Having said that, again, we want to do more in the consumer finance part. We want to look at, as I said, digitizing the way in which we lend and collect. We're now internally able to, lend out more than 1,200 crores a month. So you've got partnerships and you've got our internal generation machine that can generate loans after pre-checking their credibility and all that. And look, not all of it is going to be unsecured. Let me add, in Poonawalla Fincorp, you've got some LAP. It's not home properties, but it's small businesses and things. So you do have some part of the book which is going to remain, like a secured book.
All right, Adar, you mentioned a couple of ratios out there. I think the ROA you're targeting is 4.5%, right?
In Fincorp?
In the remainder part of the business.
Look, I mean, the ROA at the moment is 2.4% in Poonawalla Housing, and ROE is around 11.4%. But in Fincorp, it's substantially higher. So,
yes. So what are the targets out there, both on the ROA and the ROE front?
Well, I don't know. I don't know how much I can mention in terms of what we want to, what we'll end up achieving. But look, if you look at other comparables and other NBFCs, we plan to be in the top 5 in terms of those ratios, and I think that's very possible. At the moment, the ROE, for example, is a bit low because we're very under-leveraged. We're below 2 times our. We're leveraged less than 2 times in Fincorp, and that'll further go down a little bit with the cash that's going to come in. But if we plan to grow at around 30 to 40% annually in terms of our AUM, then you're going to see a substantial increase from today's ROE and ROAs as well. And look, with other partnerships that we're doing, the cost of acquisition of customers, including our internal ways of generating customers, is going to improve the ROA substantially as well going forward.
Right, we take that point, and we talk about investments, etc. here. It's an interesting one that you did because when you bought Magma Fincorp, like you said, about a couple of years ago, Adar, you put in about 3,450 odd crores, and now just one part of the business you've sold for 3,900 odd crores. So that's interesting. Also, in line with your strategy of maximizing value creation is something that you've spoken about. But again, we go back to the rationale of this because this is a longer duration, stable business. It hasn't even seen an entire business cycle. So one, what was the rush to sell this? And secondly, the other parts of the business, at what rate can the assets grow for you, the loans, etc.? 40-45% is what you're targeting.
No, I said yes, about 35 to 40% is the growth that we're targeting. Hello, sorry, I think you've...
Yeah, 35.
Yeah. We're targeting annualized, growing at between 30 to 40% because we don't want to grow any faster than that in Fincorp because, then you're not really taking care of all the things that you need to vet, the loans and the kind of assets that you're building. Look, there was no rush really to sell it. In fact, we weren't putting Poonawalla Housing on the market. It was just that this offer came about and we thought that, look, this is a great way to encash and bring in some more cash at the Fincorp level, which enhances the net worth, and we'll see what to do with that cash. It could be used, for making some small fintech acquisitions. It could be used to returning, some money to the shareholders with the company buyback. We really haven't decided. All options are open.
That's...
And the point here is that, look, then Fincorp doesn't need any capital for the next 5 years to grow.
Right. Got that. Take that point. I mean, you almost make it sound like it was an offer you could not refuse.
Yes.
It was so good, right? Yes. So you took it. Got that. That point is exactly what I was coming to next, which is what you're going to do with the cash. You said it yourself. You're looking at some fintech acquisitions because you've been talking about digital and fintech. Could you tell us a little bit more? Because you said you've not decided anything firm, but that would be one use of this cash. How large? When?
If I were to look at the 5-10-year vision and where NBFCs and banks are going to end up, I think you're going to have far fewer branches. You're going to have less physical contact and interaction, which is a good thing because you become more efficient and profitable. So from that angle, going more down the digital route and finding ways to give loans faster, to be able to vet the quality of the assets you're building, and including collecting. When we acquired this group 2 years ago, look at what we've done. We stopped doing business in certain territories. We stopped certain products which had a very high NPA. We are now AAA rated and AA plus with
Adar, do you have a short list of companies, fintech companies, a short list?
Yeah, Adar, we're trying to understand whether or not you're already in conversation, and if you could give us a timeline.
Okay, I'll tell you. We were in certain conversations, but at the moment we're not going to make any acquisitions with fintech until we at least close this deal.
Okay.
Once we have this cash, I think then we'll call for a board meeting and vet and explore options.
And this will close within 3 to 6 months, right, Adar?
Well, I would hope it closes between 3 to 4 months.
Okay.
We've just got to take the necessary approvals then with RBI, NHB, and all the regulators that I think we're going to be applying to very soon because we've already got a signed SHA with TPG, so it's a fully binding deal at the moment.
So a board meet in the first quarter of FY 24 to consider an acquisition.
Well, that, and also to perhaps consider what to do with the cash, because look, we will have a net worth which will be so high that you'll be hardly 1.5 times leveraged. And if you want your ratios of ROE and other things to pick up, then you don't want to be very, you need to have a certain level of gearing. So I think we'll explore what to do with the cash. It could be, as I said, some acquisitions. It could be a partial share buyback, which will again offer something to the shareholders. So we'll have to explore all that at that time. I think after the deal closes, we can come to what we'll do with the cash.
But how long? Give us a timeline at least. So we have a couple of options out here. Maybe
absolutely.
explore.
I think it's fair to assume around 4 months.
4 months.
6 months is on the outer side, but I think these regulatory approvals are doable in the next 3 to 4 months.
We've got a few listed fintech companies, all down 70-75%. Could you do another Magma?
I don't know. Look, there aren't many deals that one can, we worked very hard to turn this group around. I mean, you remember what the share price was and what the assets were and the returns that were there, and we've really worked very hard, and I don't know if we can keep buying assets and then keep turning them around. I think we want to build and focus on our own abilities and strategies internally, preferably. But nothing is off the table once we get this cash into the company. We will have to take a view what's in the best interest of all the stakeholders and the shareholders and how it aligns with our vision for the next 5 to 10 years.
All right, final question, Adar, before we let you go. Any of the listed entities, since they are down so much, have you had a look at them?
What, the fintech listed entities?
Yes.
No, I think, I've just been focusing on this deal at the moment. And we'll cross the bridge, I think, as you said, in 3 or 4 months once all this closes with all the regulatory approvals.
We'll be waiting for you on that side.
All right.
Thank you so much, Adar. Thank you.
Thank you.
All right, I think that's Adar Poonawalla with some clarity on what he plans to do with the cash. So we'll have to wait another 4 months, maybe first quarter of next financial year. And we will know share buyback possible, acquisition of a fintech company possible, and of course aggressive growth targets, 30 to 40% growth in AUM, and there is of course the target to maintain, not maintain, but take up a return on assets to between around 4% or so. That'll be really on the top of the list if they're able to do that. 290 on Poonawalla Fincorp. The market, by the way, has not been doing very well. It's down 200 points. I mean, this is a sharp slip that we have on our hands now. And this is one of the largest slips that we've had in some time, actually, unless, of course, unless and until things don't turn around in the next, 35-40 minutes or so. How are other sort of housing finance companies trading at? Adar said that this was an offer so good they had to take it. And he said the multiples offered were very good. I think some 3.5 times trailing price to book is the multiple that they've gotten. What about other housing finance companies? Abhishek has pulled the data out. He's standing by. Abhishek.
Well, Prashant, the